Mr. Greg, can you hear me?
Hey, what's up, Matt? How are you?
I'm fine. Hey, do me a favor, your Euro thing.
My what?
Find me 4 trucks of Euro 16s that can go to Austin.
Austin.
I'm
You
out.
mean,
All I have left is 12s. I need 4 trucks of 16s.
how quick do you need them?
The sooner the better. So, I mean, it's stuff that we were supposed to ship in June that got misplaced or overlooked or whatever you want to call it. But I've got to find 4 trucks that'll ship.
Okay, let me. I'll see what I can do here. Um, hang on one second. Or I guess are we waiting for Ash?
Yeah, I just wanted to chat with you about that. But other
Yeah.
than that, it rained here today, but we've had a string of really nice weather. I mean, we had 4th of July, a couple nights ago, and it was.
Mm-hmm.
Now I was wearing a pair of shorts and a t-shirt until about 8 o'clock, 8:30, and then it finally got just chilly enough where I pulled like a long sleeve, like this type of thing that I'm wearing. I put on and man, we've had some. Finally, we got some summertime weather where I could go out and play golf, and actually needed to mow the lawn again.
There you go.
You guys have had it already. I mean, we went from winter to summer. There was no spring. It
Yeah,
just went.
that's the way it is always here.
Hello. Hey guys, can you hear me okay?
Hey, bud.
Hey,
We
how's
can.
it going? Matt, you had some good protesting down at your Portland courthouse again.
Who knows, man? I don't even pay attention. I moved.
Yeah,
I don't live in Portland anymore.
yeah, it's interesting. What's up, Greg?
I mean, if you like protesting, Portland is the place to live, man.
It seems
There's a
fabulous.
protest every week.
It seems fabulous for it, and yeah, I did see one of the people at the bus stop actually help a police officer and tackle one of the people running. Did a full linebacker tackle on this guy.
This is in
Beautiful.
Portland.
Yeah,
You
pretty
know
sure it
more
was.
about you know more about what's going on in Portland than I do.
Yeah, keep an eye on you guys out there, man. Watching my
All I ever hear about Chicago is how many shootings there were every weekend.
Yeah, it's
Oh
unfortunate.
man,
Man.
that's yeah, a little close to home on Monday. That's for sure. That was
Yeah, no doubt.
That's not far from where you guys live, is it? The
it's
latest one.
right down it's a couple towns over. Yep.
That's not cool.
No doubt about it.
Let's go. Let's do it.
Yeah.
So we'll do a short one today, guys, if that's cool. I don't have a lot on the go, and I'm still trying to catch up with what's going on in the market.
Well, I was going to make big news on the show today, Ash. I mean, and, you want to do your disclaimer first and everything, or what do you want to do?
Yeah, I mean, basically, whatever we say on here, do it at your own risk. These aren't any idea. These are our own ideas, and we can be wrong multiple times. So only use these as a guide to guide you in figuring out what you want to do.
So I wanted to make big news today. I feel like, I mean, there's been just this overhang of negativity over the last, couple of months. And I mean, everything out in the future is bad. And I mean, I listen to the news all day, every day, and it's, we're going to be in a recession. We're in a recession. Things are terrible. And then, now all of a sudden it's like, well, wait a minute. Oil's coming down. Interest rates are coming down. So, I'm going to turn the page and just say that I think the expectation of how bad things are going to be, like my business day in and day out here doesn't reflect that at all. And so I'm starting to say, well, maybe it's not going to reflect that. And apparently, all the people that trade futures agree with me because we continue to build premiums in the backs, which tells me that the money, people that put their money where their opinion is, are bidding up the future prices of lumber. So there you go. Boom. That just happened.
Yeah, right on. I mean, look at technically, I guess if the GDP did come out for the second quarter negative, we technically are in what the old cookie cutter term of recession is, but certainly when I go out and go see things around my little neck of the woods, I don't see it.
No.
People now nobody wants to work, and you still have to beg people to come in and do stuff. But for those of us that want to come in and work every day, it's a good market, right?
Matt's been saying this
I mean-
all along. You know, Matt's been saying all along that it's like, you know, his business is good. I'm just catching up with you, Matt.
Yeah. Hey man, we're at 1.5, let's say. Let's say we've established the last couple of years, pandemic or not, we're stuck around 1.4 to 1.5 million housing starts. Even if the data showed 1.7 or 1.8, it didn't really matter because we couldn't literally build any faster than 1.4 or 1.5 with labor constraints and supply constraints. Well, there's nothing wrong with 1.4 or 1.5 million housing starts, right? I mean, that's kind of like the average number of our entire careers if you really start to analyze
It is.
the last 40 years worth of data. So we're perfectly normal. Right now, we're in a perfectly normal situation. We've got interest rates back to what I would call normal, in the mid 5s to mid 6s. That's historically low. It seems high, based on recent history. When I bought my house last June, we did a 30-year at 2.875. I don't think I'll ever get another loan like that in my lifetime, right? I'd be surprised. Maybe I will. Maybe I will. But I don't know that I will, and I'm not counting on it. Well, there's nothing wrong with 5.5%, 6.5% interest rates. I mean, it gives people an incentive to save money, but also it's not such an exorbitant rate. We're not talking 13% here. We're not talking 20%. We saw some rates like that in the 80s. I think the news media likes to blow things out of proportion because it sells. But all we've done in the last several months here is just sort of return to normal. This is really very a normal market. I mean, it sounds boring and stupid, but that's how I view it. And I think we're in for a nice summer and maybe a surprisingly good summer. There's a low inventory level out there in general, and maybe business will surprise people, myself included. So
I think we want to.
I'm optimistic.
I think we want to build more houses. I think there's a desire, a propensity, there's a demand to build more houses, even after everything we've gone through, right? I mean, Greg, I think you mentioned this a lot. I mean, one of the things, there seems to be still a demand for more houses to be built.
Yeah, I mean, listen. I mean, the reality is that everybody needs a place to. People need a place to live, and we underbuilt for the majority of the 10 years after the great financial crisis, whatever you want to call it, and so there's catch up. There's catch up. We were talking. Hey, listen. And I still believe this to be the case. I think that single family will be more challenged than multifamily, but I mean, we're talking about the market setting back to Matt's point, a sustainable level, as opposed to the unsustainable level that we've kind of been at for the last 12 months or so, that created all sorts of supply issues. And that's why there's so much stuff under construction. I mean, that's going to be the thing I'm really going to watch here over the next couple of months. What are completions, and what is that pipeline of, authorized, not started, right? That's going to be the number to watch.
Yeah, it's interesting. I've been kind of following some stories along the private investors being single investors buying houses to rentals, to large publicly traded company buying homes to rent. And in the big picture, it's not a huge number, but that a lot of those investors were absent in the 2008 through 2011 market. They
didn't exist, Ash.
They didn't exist. So
it's American Homes for Rent, Invitation Homes. I think you had the idea in 2009. When new homes were selling at like 50% of construction costs, that we should set up a fund and go buy a whole bunch of them. Great idea.
I was just lacking money.
You're a visionary, Ash.
You are a visionary.
Yeah.
What I'm saying is everybody, let's talk about the negativity, right? So if you want to see a lot of negativity, just go to Twitter, right? Everybody's telling me how the house for 3 months about how the housing prices were going to fall. And first you fall into it, then you see it not happening. You see it not happening in your own area. And then you say, well, why? Why aren't they falling? Why, what's the dynamics? Well, look at when you have a bid in the market in anything, any commodity, houses are now a commodity and they're being bid up. And literally like there are some places in Texas and some other places that companies come in and pay. I read one the other day, $42 million. They bought a whole subdivision, right? That didn't happen 10 years ago. It just didn't. There's new money and different money in the home building and home buying industry now. And so we no longer are this group of hayseeds sitting out there that nobody pays attention to. Everybody, look at money finds its way into markets to disrupt them. It's starting to disrupt this market. And the way it's doing it is they're buying undervalued products or things that they're going to turn this into a lot of rental properties and single family homes that hasn't happened before, right? So when that happens, it sends a ripple effect through all of housing that look at there's a bid, right? And it's interesting, right?
Well, the other problem is the lack of inventory. So if you're talking about single family housing specifically,
yeah,
during the last really several years, there just hasn't been that many homes listed for sale. You know, the people that live in a home already that, you know, would be maybe moving to another state or just deciding to just either downsize or upsize their house, they're always in the market, right? I mean, there's always going to be people moving. But the people that could choose to move because they thought it was a good idea at the moment, the flip side of that is how do you find your next house, right? And that is a problem, trust me.
It's a whole transfer cost.
Even today, it's still a problem. That people will find themselves bidding against other people with money and paying over sticker price. Even today, even after rates have gone up, you know, double. Because there just isn't enough inventory being listed for sale in the single family housing. Now, granted, they're going to be building like crazy a lot of apartments and multi-family type units here over the next 6-8 months, year and a half. I mean, that's where the money's really going to flow here in the next while. But that doesn't solve the single family housing problem, which is what Greg was talking about when we said we underbuilt for over 10 years. That was the big change in construction habits the last really since 2008. And now these builders, they've got these industrial buyers on the other end of the deal floating $42 million checks and saying, yeah, we'll buy the whole plate. We'll just take it all, you know? What a dream.
Now look, it still isn't a big percentage, but let's say it's 5 to 10%. That's a big chunk of a single family under the market, right? Which was non-existent. Anyway, what I want to talk about also is, so I was reading about this new lumber futures contract, right? And I know, Greg, we mentioned last week or a couple weeks ago, we didn't think it was going to happen for a year or something, but it's here. They're going to do it side by side with the other contracts. Is that how you understand it?
Yeah. No, I guess it's August 8th. Truckload market delivered Chicago. 2x4 SPF Hemford, Doug fir larch. Should be interesting. See if that adds what level of liquidity that adds to the market. I mean, obviously, I've got a lot of questions about how that's gonna transpire. I mean, I look at it. There's great opportunity for basis trading, forward selling in the market, and I suppose as long as there's two contracts, there's going to be some real good arbitrage opportunities.
So I guess the question is: there going to be two contracts, or are they
only for a while though? They're going to end this current contract, is what I read this morning.
Yeah. Well, I
So
mean, that's
you'll be flipping, let's say you're long March, right, of 2023. Well, by the time we get to March of 2023, that'll be converted into
yeah.
four
No, you can't. So
contracts.
you can't. They can't change a contract once it's open. So the ones that are open now, that contract will exist until that stuff's all done. So I mean, we're open
The
until
way I
July.
read it, Greg, is they're going to allow you to roll your single 110,000 board foot contract into 4 27.5 thousand board foot contracts if you choose to.
Right.
So
the
you'll
question
buy
is,
sell your
if you choose to. That's the key, right?
right.
Yeah.
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 So how will this throw off all the historical basis charts that everybody's been tracking for the last 50 years? Since it's a completely different contract now. I mean, it's not just the spruce, right?
Matt, Ash, as you know very well, is all our work is done on a cash to cash basis, and then that you make the adjustment for the futures market. I mean, the historical relationships are cash to cash.
No, understand that, but
you'll just need to do an additional and make an additional adjustment.
Well, this sounds like it's more of an index where you got Doug fir, hem fir, and spruce now.
It's the lowest common denominator.
Deliverable, so you got to go with the lowest common denominator, right?
Yep.
Okay. All right, that makes sense. What else do we want to talk about? Do we think this is going to bring more volume into the market?
I hope so.
That's
I really do. I mean, I think it'd be good for all of us if there's more volume. You really think a contract with 2,300 open interests is reflective of the massive size and importance of the lumber industry?
Well,
I mean, just an open question. I mean, the lumber industry is gigantic, man. We're talking, it's a big part of this country's economy. It's a leading indicator of what's coming down the pipe for people like us that know these things. It's great. Like we know, a year or two in advance that we knew last year that we'd be battling inflation this year. We talked about it on this show over a year ago. How did we know that? Because we're in the lumber business, right? And we were seeing it in the lumber business over a year ago. Yeah. So, I mean, I think it's great that we're imagining a way forward that might combat this lack of open interest, which is not a real reflection of our business. I mean, our business is gigantic, and to have 2,300 open interests, it's actually kind of embarrassing.
The real number to look at though is like the average daily trading volume. I mean, that's the number that's more significant, and I mean, it still represents a relatively small percentage of the total amount that's traded. But I mean, and I don't know, that'd be interesting to see is like if you looked at the oil market or
corn. I think those trade like 10x of what their production is, something like that, right?
Yeah, they trade at a higher percentage of the total, where we trade at a percentage of it. Right.
Yeah,
right.
No doubt. I mean, I guess the one thing that I'm still scratching my head on is why didn't they include Southern Pine or do anything about pine? It's the growing contract, and it's like the biggest expanding fiber base out there. I mean, you don't see really many new mills on the spruce side, or you see them all in the south. What is you think? Hopefully, they have something for that at some point, right? But I guess with this too, you can use a basis off it and do that with it also, right? Which people do now.
Yep.
Yeah. I mean, honestly, it'd be nice if they do eventually get a Southern Yellow Pine contract, and they could maybe run them concurrently to each other, and maybe they'll fold them in. Maybe they'll fold them in together all in one big basket in the future, but. I mean, right now there's a definite difference.
Yeah, Sean had a good point here. So this is what I was thinking too. So right away we go to almost 9,000 open interest, right? Times 4,
maybe.
Right. So
maybe.
Is that what they're going for, or do they want to get like 50,000 in there? Right. I mean, that'd be. I guess the question is, we need more people and more new people using it, right? And
I think it'll help a lot of distributors in this country that now have an actual one-to-one basis in how to hedge your inventory as a truck, right? Let's say you're let's say you're a multi-state distributor. I'll use an old name from the past. Let's say you're Lake States, okay? Lake States back in the 90s, and you've got 6 different locations, and you're controlling inventory in the upper Midwest, and you're selling to 7 different states regionally. They could have used this type of a contract. You know, you could have called up Doug Denny and said, Doug, what do you think of these contracts? You know, like it's a 1-for-1 truck contract. I think they would have loved it, honestly. I think this can help the distributor in ways they haven't even thought of yet. So maybe that alone will help increase the open interest. It sure gives you the management side of it is going to be more tolerable for people. I mean, Greg and I have sat on the wrong side of basis trades for months, and I've had to look at my statement and seen minus $150,000 on some of these trades I've done in the last 2.5 years because the futures price wasn't reflecting the cash price, and there was a big disconnect between those two things. Now, when you have only 2,300 open interest on a contract that's 110,000 board feet, and you change it to 8,000 open interest on a contract that's 27,000 board feet, I'm just hoping that the industry says, great, let's get involved in this and figure out how to use it. Because it's a great tool, honestly. It really is.
Yeah, and it really should bring
Matt,
in more speculators too.
Matt, you know, you bring up a good point. I mean, you know, always one of the hardest things I think for a lot of people in the business is, you know, when you have you know, futures profits and losses, you get a statement every day and you look at it. You know, you think about all of the people that have inventory or forwards. You know, you don't have to look at the mark to market of that every single day. I mean,
right.
You know, some of us, you and I may do that more religiously than others, but you know that there's people out there that can have, you know, massive unrealized losses that they don't have to like stare in the face that you do when the futures market moves against you really quickly and you've got margin call.
Unless you're trading aluminum on the LME exchange. And you're sitting on one of those couches with the big suits on. Hey, Dave was saying from Amherst, wow, LSL and Doug Denny blast from his past.
Yeah.
Well, I happen to be friends with Doug Denny, and I'm
sure he appreciates the shout out too. You know,
I like Doug. He's
tag him on today's show.
Doug was a smart man. Still is a smart man.
So Sean was asking, so mills will deliver in truckloads. I didn't think you could expire. I'm just guessing. I didn't think you can expire long or short on this contract. You have to trade out of it beforehand. Is that right? Or you can deliver the truckloads if you want to, right?
You know what?
It says in the read the fine print. I'll send you a link that has the CME's official thing, but it says it's going to be settled Chicago switch district, so you can physically you can do
delivery.
Yes, there's
but you
no
can't
change. It's a smaller contract.
You can't have wood sitting on the ground and to reload and deliver it. You need, or you can EFP that.
No, I think you can. I mean, those are all the questions that need to get drilled in, and the education that has to happen is what is actually happening. You know, one of the great things about this, Ash, is how it sets up similar to like grain deliveries, where, you know, the delivery is to a specific silo point, but everybody can figure out what that means delivered to Milwaukee or Indianapolis or Omaha or Nashville, right? There's going to be, it's like, hey, it's Chicago plus 22 or 12 plus 17, whatever it is, right?
So what it'll really open up, I think, and we've been talking about, is right now when people do EFPs, there's a certain group of people that kind of only do it with another certain group of people. This top secret society of EFPers in lumber that nobody ever sees. That it'll open this up for everybody to EFP the contract. So Greg and Matt can EFP with Dave or somebody else somewhere else. You just exchange your long for short. You decide what the price is, you report it to the CME, and you offset your trades, and you deliver the lumber and invoice it, right? You can EFP trucks to Southern Pine. So it'll really allow small, mid-sized wholesalers to actually be involved in the EFP process outside of the 7 people that do it with the 3 mills every few months on carloads right now, right?
Yeah, I mean, it should open up to more people, but the key to all of that is going to be the education level. I mean, I feel like the one thing that limits a lot of people is, the fear of what they don't know. And, the key with a truckload delivery is it's going to be, it's easy, and people should out of the gate try it and see how it works, so they gain a comfort level with it, so that they can use it more effectively to manage their business. This is just another tool in the whole lumber buying, inventory management basket.
Yeah, I got
I think
you.
the other
That
thing
makes-
it helps.
It's right up there with, like, hey, I do contracts and I do futures, right? I mean, you think about it. If you're in the business and you give up complete control of the pricing of your lumber to some nebulous third party, this is something where you actually have control over what you're doing.
Yeah, and it also is going to change the fiber origin, the importance of where this lumber is coming from. So the old contracts based on Prince George and the BC industry, and so everything that we know, everything we've learned in the last 30 plus years of trading futures is based on Prince George, based on mills like West Fraser, Canfor, Toco, that who had operations there. This new contract is going to benefit the mills like in Alberta and Ontario the most, right? So if you think about the British Columbia influence is going to be lessened by this contract, and the middle of the country, in the middle of Canada, is going to become more relevant in the future, because they can truck down here a lot easier than we can from Prince George, right? Try to book a truck from Babine to Chicago. It's going to cost you a lot. But that same truck you could book out of Southern Ontario sawmill pretty simply, right? So I think that's gonna benefit some different mills, and that might bring some new money in the game also, just because you're shifting the geographic relevance of this contract now.
Think about the EFPing opportunities for the European people, the European mills that put all wood on docks right now. They could set up contracts off of the futures based on an adder and start doing that and locking in their risk, right?
And then they don't even need to guess what the price in the future is going to be. Now they can just open up their futures account and see what the real-time price is. So if you're a German mill and you want to figure out what could I sell some lumber to Matt into Cape Canaveral for in January 2023, you can just look at the contract at 663 and go, well, add my price, add my premium, here's the tally I want to ship, and then we can propose a deal based on that. He doesn't even need to call me.
You can just set it up at print -100 delivered to Canaveral.
Yeah, I'll take that.
I think that isn't that how most of the contracts are set up now?
I don't know. Greg knows. He's good at that.
Yeah. I will take print -100 delivered anywhere on
straight 16s only.
All right. Well, look guys, it was a good conversation. We're up against a half an hour. Again, I think it's important for everybody to go and read those fine details, because I'm still not certain how the exact delivery works and how long you can hold stuff. But I think it's good for people to learn how to do a lot of this stuff themselves and trade it themselves. And it's a lot. I mean, obviously, when it's 25% of the original contract, I think what Matt is saying is, my suggestion would be to figure out how you can click the mouse yourself and buy and sell your own futures and learn how to do those, because there's nothing better than educating yourself and having somebody sitting in a chair in your company that actually knows how to do it instead of outsourcing that to a third party.
All right, guys, listen. No. I was saying it's. Well, I mean, I think Ashley's right, though. I mean, the key is we need to read all the fine print and make sure that we understand how it, and wait when it's finalized, and then that education process is going to be important to the industry. And but I think, I mean, anything that adds more opportunity for people to manage risk is a positive.
Hey, look, at the CME is they put out great information on it. They have put out great information. So go to their site. I think I saw one. Allison put something out on LinkedIn that was really good, and they're a great source to lean on because they want.
Hey Ash,
the company. Yes.
I have the link on my email. I'll forward this email to you, and you can put it on your Materials Exchange LinkedIn page for people to go read the rules themselves. So I'll be helping you provide some free information to the industry, because I mean, for personal reasons and for overall beneficial reasons for our society, I think it's good that people understand what futures can do for you. It's an important tool for me. I've been able to use it. I had to do a lot of research 20 some years ago to figure out how to do it. But once I finally figured it out by asking people like you and Greg, it makes some sense, right? So if people can get over the fear of the unknown, then we have a chance to really make this new contract quite valuable.
It's one truck of lumber. It's one truck of lumber. What fear is there? Come on.
I don't know, dude. I'm just devil's advocate here. I'm trying to be helpful. This is our job.
You are.
And Matt, Greg, and I are available for consulting to help people figure this out if they want to.
All right, guys. Hey, listen. Have a great. Get back to you with what I can do. Okay.
All right, sounds
good, guys. Thank you.
But